earn money, the bank plus others are there. Private sector banks are there, means they come in commercial only. Nowadays we have these payment banks. All these bank types will be studying, isn't it? This is the overall banking. See this banking. It is for individuals and firms. So banking is basically for all. Individual customer also and for companies also. For individuals, what do we say? It is retail and entrepreneurial. Now entrepreneurial means current, FD, then retail loans. Okay. Then class retail banking. This is a HNI banking. Class retail. Okay. Class retail banking means HNI, private banking. Okay. Then entrepreneurial banking means it relates to agriculture and MSME. So agriculture means basically this is here. Individual entrepreneur is separate and firm entrepreneur is separate. Individual means even the agriculturist or the farmer is also an entrepreneur because he is also doing the business actually. Then MSME individual, right? Small business, proprietorship. Then firms we have wholesale means bigger banks, corporate banking, and MSME, private limited. Okay. So this is the overall customer base of the banking, isn't it? What are the types of banks? Look at this. The total banks types are over here. Scheduled banks and non-scheduled banks. Both of them are there, scheduled and non-scheduled. In scheduled banks, there are basically commercial banks and cooperative banks. Okay, commercial and cooperative. Now in commercial banks, we have again foreign banks, RRBs, public sector banks and private sector banks. Okay, foreign bank, RRBs, public sector and private sector. Now if you look at this RRB is also a public sector bank actually, isn't it? Because you are under the public sector concept. Those who are in the RRBs. Okay. So they are also public sector banks. Now these public sector banks are basically here. Earlier it was a distinction, SBI, others. Now it's not there. So now all are on the same page. Private sector banks, again, old age and new age. Nowadays in this private sector also we have this payment banks, okay, small finance banks, all these are under this. Then cooperative. Cooperative is urban cooperative or state cooperative. What is urban cooperative? Here, kindly note, DCCBs means District Central Cooperative Banks. These are the government bodies, state governments. And various urban cooperative banks like Cosmos Banks, Saraswat Bank. Okay, these are the major banks in cooperatives. These are bigger than some of the private banks and nationalized banks, almost leveled of nationalized banks. So cooperative banks are of urban cooperative or state cooperative. Then again we have non-scheduled banks. Non-scheduled means again roughly it is cooperative. One second. Yeah. So these are the basically cooperative banks and means urban and state. Okay, we are having the classification again. Later we are having it. What are scheduled banks? Scheduled banks mean those which are in the second schedule of RBI. Okay, those which are in the second schedule. Kindly remember, RBI Act 1934, which are in the second schedule. The schedule consists of those banks which satisfy the various parameters under Section 42 of BR Act. So, which is the second schedule? The schedule will have those banks only which satisfy the clause 42 of the BR Act. So, you have to remember these two words. One is what is the scheduled bank? under second schedule of RBI Act 1934. Okay, and what is clause 42 means, who is in that second schedule? In second schedule, those banks are there which are under clause 42 of the BR Act. Okay, as of 2/8/2019, minimum paid up capital to set up a bank in India is 500 crores, of which the promoter should have at least 51% share. Okay, so this is a basic criteria. So minimum paid up capital to set up a bank in India is 500 CR, and promoter should have minimum 51% stake. Got it? Remember these figures. Now, those who are watching on YouTube, this being the first lecture, it is available on YouTube also. So download Adda 24/7 app on your mobile. Okay. You get premium study material, live classes, ebooks, tests, everything you get it. Okay. Now let's look at each bank. RRB. Okay, regional rural bank. These are what? These are basically public sector banks. Okay. These are special types of commercial banks that focus only on agriculture and rural sector. They are formed under this RRB Act 1976. Kindly note. RRBs were established in 1975 and the Act was formed in 1976. It's a joint venture between central government 50%, state government 15%, and commercial banks 35%. This commercial bank is called as a sponsor bank. Okay, it's a sponsor bank. Means like this we have many RRBs actually. How many of you are working in RRBs? Anyone? I have. I know one example of Vidarbha Konkan Bank in Maharashtra. So the sponsor bank is Bank of India for it. 15% is owned by the state government and central government owns 50%. Anyone from RRB over here? Yeah. Chalo. Let's move on. LAB, local area bank. Those who are watching on YouTube, you also. Anyone from RRB? Kindly type yes in the comment section. LAB, local area bank. So this LAB was introduced in 1996. They are organized by the private sector bank. Now what is this? Understand this. LAB is basically local area bank. It is organized by this private sectors only. The main aim is profit. So only there are 4 LABs right now. 4 LABs. Only 4. Okay. All of which are located in South India. Now the names are not asked to you in exam. So coastal local area bank, then capital local area bank, Krishna Bhima Samruddhi local bank, and Subhadra local area bank. So these are the 4 banks. They won't ask you the names as such, but you at least remember there are 4 local area banks, 4 LABs. Okay. What are the specialized banks? Now specialized banks mean those EXIM, CAIIB, NABARD. These are all specialized banks. Mean they don't have the branches. Okay. They only provide the soft loans. Soft loan means subsidies. They only provide the subsidies. Okay, like in PMEGP you have, right? In PMEGP or in Khadi Gramodyog, the subsidy is given by these specialized banks, CAIIB or NABARD. In Khadi Gramodyog, it is given by NABARD. Okay. So what is the subsidy? Subsidy means suppose if the margin is to be brought up for 25%. Say this, in normal loan what happens? Bank gives 75% of the loan, customer brings 25% of the margin. Okay. So in this 25% of the margin, 20% is given by this bank, specialized bank, CAIIB, EXIM or NABARD, depending on what the structure is or what the type of loan is. And 5% of the margin is brought in by the customer. Okay. Small finance banks. As the name suggests, this type of bank looks after the micro industries. Now, small finance, name itself, small finance. Okay. So, small farmers, unorganized sectors of the society by providing them term loans. RBI has mandated that the minimum paid up voting equity capital for small finance banks should be 200 CR. So, commercial banks it was 500 CR. Small finance banks it is 200 CR. Okay. except for such small finance banks which are converted from UCBs. UCBs means urban cooperative banks. So, in exam, the question is small finance banks should have a minimum capital base of what? So, 200 CR, kindly note. These are the examples: AU Small Finance, Equitas, Jana Small Finance. Okay. Subscribe to Officers Adda 24/7 YouTube channel. Everyone, those who are watching on YouTube also, and those who are in the paid class also. Okay, subscribe to this channel immediately. You'll get all the updates, latest updates, plus free YouTube series. Everyone, I do take on a daily basis free YouTube series. Yeah. So you are a Nazir in this RRPs, no? Okay. Good. Which RRP? What is the name? Nazir? Yeah. Payment banks. Okay. What are the payment banks? So these are newly introduced. Generally, all these mobile companies have become the payment banks. Generally, newly introduced form of banking. Okay. The payment banks have been conceptualized by RBI. Payment with an account in the payments bank can only depositor, means people with an account can deposit only up to 2 lakh rupees and cannot apply for credit card under this account. So no loan or credit card is given by these payment banks. It needs to have a minimum capital base of 100. What is this? 1,000 million. Keep it simple. It is 1,000 million. Okay. So 1 billion, I think so then. Yeah, 1 billion. So it needs to have a capital base of 1 billion. 1 billion means, remember 9 zeros. Here, it's easy to remember it that way. Okay. So 1 billion. 1 billion. Okay. Billion means 9 zeros. So it needs to have a minimum capital base of 1 billion. Minimum initial contribution of the promoter to the payment banks to paid up equity shall be 40% for the first 5 years. So basically, again remember, 1 billion is the minimum capital and minimum share of the promoter over there should be 40%. These are the examples: Airtel Payments Bank, India Post, yeah, Jio. The money received as deposits can be invested in secure government securities only. Now here we are talking of only payment banks. In payment banks, whatever money is received, it can be deposited in government securities only in form of SLR. This must amount to 75% of the demand deposits, and remaining 25% can be placed as a time deposit with this commercial banks, SCBs. So what does it mean? Look at this. This deposit with these payment banks, okay, should be the deposit which it gets. It cannot give the loan. So loan is out. So this bank will have to deposit 75% with the government securities and 25% as FDs with the commercial banks, scheduled commercial. Payment banks will be permitted to make personal payments and receive cross-border remittances on the current account. Obviously, isn't it? So it will be allowed to make the like payment transactions. It can issue debit cards. It can provide loan through partner banks. This is the important part. See, although these banks cannot give their own loans, but they can give the loans of the partner banks. Means, for example, tomorrow this post payment bank, okay, or Geo payment bank. So this post payment bank can tie up with SBI, can tie up with PNB for the loans. So that is done. That is allowed. They are not allowed to give their own loan. So own loan is okay. They can act as the agent also, isn't it? Neobanks. This is a new technology which has come in. Neobanks means what? These are only digital only banking platforms that operate solely online. There is no branch. Kindly note, there is no branch. Okay. For example, I'll give you this what? Phone Pay, okay, or this Paytm. They don't have any branches, but they give the loans. There are the total almost 16, 17 neobanks are there. It is a five bank. It's called as five bank. Okay. So you remember only one point about neobanks which comes in exam. That is, They don't have any physical branch. Acha, Telangana Gramin Bank. Okay. So simply remember, they do not have any physical presence. Neobanks don't have any physical presence. This is a new concept coming up in banking. Neobanks. Many of you might not have heard about these neobanks, but there are almost 16, 17 neobanks in India. 16 to 17. Okay. So don't go into the details. What is a neobank? I've given it over here, but not required by you. Now look at this. Overall business of banking. Remember, retail banking amounts to 60% of the income of the banking. 60%. Okay. Wholesale banking means corporate banking amounts to 25% of the business. And wealth management amounts to 15%. Okay. So if the total banking system is earning 100 rupees, 60 rupees are from retail banking, 25 rupees are from corporate banking, and wealth management is 15%, 15 rupees. That's why it is a prime importance for this retail banking. Okay. Nowadays, what has happened is retail banking and wealth management, they have been combined. See here, this wealth management 15% comes means what? This wealth management is actually the part of retail banking only nowadays. So net retail banking's income is how much? 60 plus 15, 75%. So two-thirds of the income of the banking comes from retail banking nowadays. Okay. And there are advantages to retail banking. Risk is diversified, very less NPA. Why? Because look at this. What is the advantage of retail banking? See here. If I have 1 crore rupees, 1 crore. So in corporate banking, what will I do? I'll give it to one customer. 1 crore loan to one customer. In retail banking, what will I do? I'll divide this into 100 customers, 1 lakh each. So there are very less chance that this 100 customers together will be NPA. Very less chance. One customer can become NPA, but 100 customers together becoming NPA, the chances are very less. Okay. So that's why retail banking is very important nowadays. Okay. So what is the retail banking segment? It is the largest income contributor. It is a segment most people are familiar with, as it includes banks branches. It sells the products like deposit, credit card, mortgages, loans, etc. Right? This segment is also known as personal banking, as it serves individuals. However, it is also targeted towards small commercial clients. Now, understand something. See this. Firstly, you understand retail banking. We do all the retail jobs like deposits, loans, credit cards, personal loans, then home loans, all these. Plus third party products. These have also been added now. Plus, we give the loans for the commercial clients also. Small commercial means what? Proprietorship, partnership, private limited companies. This also we give it. Corporate banking is generally for this limited companies and big companies. Okay. Revenue from retail banking is split into interest and non-interest income. Now, income means in retail banking, what is the income? Loans and TPP, third party products, right? Loans means what? Interest. If I give the loans, I'll get the interest. So, roughly it is 70% of the income. And TPP is fee commission, right? How many of you have the target for insurance in your bank? Everyone. Tell me sincerely. How many of you have the target for insurance in your banks and get pressure for the insurance? Sincerely tell me. Insurance, your boss says insurance, your chief manager comes, insurance, everyone is calling insurance. How many of you have this? All of you? Almost? Right? Almost everyone nowadays, isn't it? There is no bank which doesn't sell insurance. Even these RRBs, I think so, you also sells to some extent. Although RRBs are not to that extent, but then also you might be having it, Telangana. Right? Yeah. Everyone is having the insurance. Why? Why do we have so much insurance pressure? Can anyone tell me? Because in insurance, the advantage is, kindly note, you don't have any risk. You only act as the agent. You don't have any risk, right? Because we are the agents. We only get a commission. That's it. And if something happens to that person or for whom we insurance is drawn, that insurance company will look into it, isn't it? We are not concerned with it. Got it? So that's why all of you are nowadays selling insurance. And what is the premium percentage you are getting? Roughly you get around 30 to 35% in insurance. Means if you collect the insurance premium of 10,000, your bank will get the income of 3,500. Roughly 3,500. Such huge amount you are getting. 3,500 is a big amount, and that also without risk. Right? So it is calculated by taking the interest collected from loans and the credit cards and subtracting the interest paid on deposit. This is about the interest part, NII. What is NII? Net interest income. Loan interest minus deposit interest. Right? That's right, Jitendra. That is the point. That's what you are right, Jitendra. Main executive will get a foreign trip. I've always seen this in nationalized banks. What happens is the one who sells doesn't get anything. Doesn't get anything. No, nothing is given to that person. By the bank also, by that insurance company also. But your general manager, zonal manager, they all get these foreign trips. They don't sell anything. Not even a single insurance rupee they sell. Right? But they get that foreign trip. I've seen this many times. And this is the main problem. In fact, I would suggest when I was in this one of the private banks, when I started my journey, I was in the private banking. See here, I have worked myself in private bank as well as foreign banks. I was working with HDFC Bank earlier as a this manager. Then from there I shifted to Citibank, Citigroup. There, Citibank means that world's second, third largest bank. World's means Citibank is among the top 3 banks in the world. So there I was working. Then I was working later I was working in Singapore, DBS, Development Bank of Singapore Bank, DBS. I was working in Mumbai branch, head office, but DBS. So what I have seen over there versus whatever I am seeing in nationalized banks, there's a difference. What is the difference? In all the private banks, the one who sells or the one who brings that insurance is given some part of the commission by the bank in some way or the other. It's not that they'll give cash only. They'll give him some other ways. Some coupons they'll give you, they'll give you some trip by the bank. Something in the hotels, anything for spending they'll give you. But in nationalized banks, I have not seen this thing. Do you get anything? If you do the insurance, do you get anything from the bank as such? From the bank. At the branch level, do you get anything? I don't think so, because I have not heard among at least the local guys who tell me in nationalized banks. That should be started actually. Yeah, that should be started. I always feel that the one who sells should get some part. If you get some part, then here, if you get something, then only you will work, right? Why should a person work for extra? If you get something, only then you will be working. At least give 2% of that, whatever you are bringing. Even if I bring the insurance premium of 10,000, at least give 200 rupees to that employee in the salary. That's also enough, isn't it? But nothing. And they should change actually. Instead of giving the seniors everything, I feel it must be given at a junior level. Of course, you give the seniors also. Nobody is arguing that you should not give it to the seniors. You should give, but give something to the juniors also, isn't it? So that's it about this loan income and non-interest income is TPP. Okay, it contributes to around 30% of the retail banking segments. Yeah. When I was in these private banks, all the banks used to give us something or the other. Because I myself have earned many huge amount in insurance. So evolution of retail banking. See, the evolution of retail banking means what? It was here. Retail banking was actually started by foreign banks. In our country, before nationalization in 1969, okay, before nationalization, we didn't have this retail banking concept. Our banks were only focusing on corporate banks. Means they were getting the money from the retail clients. They used to get the deposit from you and me, but they used to give the loan to only big companies. But that changed after nationalization. Before that, also, there were some retail banks. Before that, some foreign banks. Standard Chartered was there in India, then Citibank was there in India. Okay? Yeah. No, Deepak, it's like this. See, here, the question asked is, does the insurance company or government of India has any guidelines? Here, the guideline is such, like this. The guideline is this, that the insurance company should not give directly anything to the employee. That's the guideline. Okay, insurance company should not give anything directly to the employee. That's right. Means bank employee should not give anything. Otherwise, what will happen? That employee will sell only that insurance company's products. So the guideline is this: the insurance company will not directly give any commission or anything to the employee, but that is for the insurance company. Bank can give you. What's the problem with your bank? Bank can give you, isn't it? That guideline is from RBI. Okay, Deepak? So next. So the conventional banking business was carried out on by public sector banks on more generalized approach, and there wasn't any specific demarcation. So forget all these things. Importantly, remember the banks were nationalized in 1969. First, there were two phases of nationalization. One was in this 1960s, second was in 1988 roughly at that time. The entry of private sector banks in 1990s, basically see this, when this new age private sector banks came in, HDFC Bank, ICICI Bank, when they came in, then the real competition started. Before that, there was no competition in banking. Okay, private sector banks came in 1991 actually. Narsimham Committee. 1991 Narsimham Committee, you must remember it by heart, because this committee gave the way for this private sector banks. Because of that committee, the private sector banks were formed. Okay, so the entry of private sector banks in 1990s created the real competition. These nationalized banks, these private banks, from the day one, they came up with this server system. See, nationalized banks came into this what core banking system, CBS we call it. They came into core banking, and after 2005, 2010 roughly, between this phase 2005 to 2010, all the nationalized banks came into CBS, core banking. Before that, they were not under CBS. But these private sector banks, HDFC, ICICI, IndusInd, from the day one, 1994, they started their first branch in 1994. From day one, they were having this this online. Okay, so that's why they had this advantage. So coming back to this point, that it started actually over there, and private sector banks gave the real impetus or real competition. Okay. Prerequisite for the success of retail banking. Basically, see this prerequisite means what? Why will the retail banking succeed? Main points I'll tell you. Channel innovation. Channel innovation means you have to constantly think how to reach to your customer. Earlier we had only branches, then the branches, now the branches are almost, I won't say nullified, but there are alternate channels as well now, right? The number of customers online are almost same or more than the customers in the branch nowadays, right? Direct banking means fastest growing channel, means what? Directly again online only. Product appropriateness, you must give the customers that product which is needed. Okay, for example, what do you mean by product appropriateness? It means that, see here, right now what is the flavor? See here, the new flavor in banking is nowadays, it is all consumer loans below 1 lakh. All the banks are giving this consumer loans now, means all the NBFCs are mainly giving. So you must also have that product which is consumer loan, and it should be fast, very important. Okay, fast, very fast. So product appropriateness, then pricing. You must be competitive in the market. Okay, pricing. Scoring models for assessing the credit worthiness, very important. Scoring models means what? This is known as CIBIL. We are having this topic further. Okay, we must have this CIBIL model. So that, why do we need the CIBIL model? We need a CIBIL model because we need to have the loans faster. By CIBIL you get the scores, right? 300 to 900. Minimum score of CIBIL is 300, maximum score of CIBIL is 900, right? Then credit worthiness. You will check this credit worthiness using this score, right? Good score is considered as, depending on the bank, generally it is 700. 700 is considered as a good score, generally, okay? So it depends on bank to bank. But remember, the exam question is minimum and maximum, 300 to 900, okay? Now this CIBIL is being replaced now, kindly remember, by account aggregator. I'll come to this later. We are having this CIBIL chapter. At that time, I'll come to this account aggregator also. Okay. Then consumer protection environment. Consumer protection means what? Nowadays, this has become very important. Consumer protection means what? You do anything, the customer immediately goes to ombudsman, goes to RBI. What has the customer to do? Just write an email. Tuk, sit there. I went there, this. All these bankers are not working at all. Write a mail, CC to RBI governor, CC to ombudsman, CC to what? Consumer department, consumer protection department. They put CC to everyone. Nowadays it has become so easy, right? So that's why consumer protection has gained a huge importance now, isn't it? What are the challenges? Challenges are basically consumer protection and pricing. Okay, consumer protection, again the same thing which I discussed. Inadequacy of MIS, very important. MIS means management information system. Inadequacy means what? Daily the customers are rising. Daily you are getting so many customers, newborns. How many new people are born in India on a daily basis? So this MIS is becoming lesser, and it is a challenging task. Understanding the KYC AML issues, right? They are changing on a daily basis. Daily you get something new in the AML, right? Managing the risk means of assets and liabilities, loans and deposits. Effects of disruptive technologies. What is this disruptive? Disruptive, you are having this subject, you are having this topic. Disruptive means AI, artificial intelligence, blockchain. These are the new technologies. AI, kindly read this. We will be studying this topic again whenever when we will come to this chapter. I'll teach you AI and blockchain. Very, 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 very important parts. This is the future of banking. Kindly note, blockchain is the future of banking. Okay. How many of you know about blockchain technology? Have you heard about blockchain technology? How many of you? Right? So blockchain is the future, kindly remember. Even AI. Then continuing growth. Continuously you have to grow. Okay, if you stop anywhere, then you are gone. That's why you have the daily pressures, daily targets. What is the future of retail banking? See this rise of young Indian professionals, because Indians are rising like anything nowadays. Means 65% of our population is below 35 years. Growth of economic superpower, right? Growth as an economic superpower means India is coming up like anything. You yourself might have seen we are the fifth largest economy now, moving towards fourth. I think so. We'll be third by next 1 or 2 years. Next 1 2 years will be third, definitely. Who's ahead of us? Only Japan and Germany. That's it. Then we'll be third. Then China and USA. Those are later. That we'll see later. First, let's get at least to the third rank. Increasing purchasing power of the middle class. Right? Purchasing power means this has grown because of UPI. UPI has changed the entire banking. Means even 5 rupees you give to that chai wala, okay, or 5 rupees you give to anyone, you give it through the UPI nowadays. Now our government is coming up with this e-rupee concept, right? E-rupee means basically this is CBDC. Again, it means blockchain. This e-rupee CBDC is based on blockchain. That's why I said we'll come to this later when we go through that topic. Financial market reforms. Daily RBI is coming up with new norms, right? So these are basically the reforms. What are the business approaches? Business approaches are various. Say this, kindly understand. There are two things. One is a business model and second is a business approach. Kindly note. Business model versus business approach. Okay? Model is separate, approach is separate. Okay? Here we are talking of only approach. Model we'll be studying later. Approaches are three. Approach means what? The way you handle the banking. There are three approaches mainly. One is SBO, second is departmental, third is integrated approach. What is SBO? SBO means, here I'll show you all the three. SBO means what? It is defined as a profit center. Means what? It says that under SBO, you have to earn your own income and then manage the expenses. It's like our house. In our house, whatever salary we get, we have to manage our expenses as per that salary only, isn't it? So SBU can be defined as a profit center which focuses on product offering and market segment. An SBU can be a business unit of a large corporation or it can be business in itself, right? So basically what does it mean? It means it's a profit center. Profit center means what? Kindly note, profit center means you have to earn the profit of yourself. Each branch has to earn the profit of itself. Okay? Head office will not support you now. Now that those days are gone, where head office supports the branches. Okay? Then the demarcation of SBO is by MBO, management by objective. This also question comes many times. MBO. What is MBO? MBO means what? Here the branches or the bank will set the target first. That this year we have to earn the profit of 15% or 20% or 30%. Accordingly, they will devise a strategy. Okay? So MBO means that. When the business model is dealt as a modular strategy for achieving the targeted profit. So basically remember, target is set first and then it is brought down as a knockdown module. Now what is knockdown module? See this, knockdown means I'll break this into various branches. Suppose if I want a 15% profit for each for my bank, I'll divide it into branches. So these branches will bring in that much profit. Okay? So that is SBU. Second is departmental approach. This is what we follow in our branches, nationalized banks. Cash department, clearing department, loan department, account opening department. Okay? So these are all various departments who work in silos. Silos means what? They don't talk to each other. Okay? This approach segregates the functions of an organization into departments such as accounting, marketing, finance, planning, etc. or cash clearing, etc. Generally, each department has its manager and chain of command. Public sector banks have adopted this departmental approach. Okay? Third one, integrated. It is basically the small branches. Generally, integrated approach is followed in small businesses or even the small banks nowadays, we call it. So, in that, what happens? You see in your own banks. In your own bank, you see in your branches. In many branches, there are no staff, right? When there is no staff, what is done? Each employee will do all the jobs. Each employee will do all the jobs. This is same is happening in your banks also nowadays, isn't it? So integrated approach is generally adopted in smaller branches. It is a cohesive approach. All the employees will do all the jobs. Okay, this will increase the profitability of the bank, of course, but the employee will get too much pressurized, isn't it? So these are the three approaches: SBO, departmental, and integrated. Now these are just the questions. Let's go through one of them, a few of them. Okay, the loan amount will be based upon market. Hold on. Let's solve some questions and then we can move on to the next topic. The loan amount will be based upon the market value of the property and could range from dash. So loan amount means what in home loans? Okay. In home loans, what is generally the loan amount given? Okay, for home loans. What do you say? Yes, it depends on bank to bank and loan to loan. It is generally 50 to 70%, or if the loan is below 30 lakhs, if the loan is below 30 lakhs, even up to 90% it is given. Even up to 90%, below 30 lakhs. See here, RBI has given the criteria. RBI says that if your loan is below 30 lakhs, give it up to 90%. If your loan is between 30 lakhs to 75 lakhs, give it up to 85%. And if your loan is above 75 lakhs, give it up to 75% only. That is the rule. RBI says that. Okay? Yeah. The maximum monthly payment under reverse mortgage. Now this is separate. Reverse mortgage will cover it later, not now. Reverse mortgage, yeah. Now let's move on to this topic: corporate versus retail banking. Corporate banking versus retail banking. Now understand, corporate banking means what? What is the difference between this corporate and retail? Very simple. Corporate banking means you will be targeting only the corporate big clients, big notch. Okay? Big customers you will be targeting. And in retail banking, you will be targeting the smaller customers. Right? Smaller means what? Individual customers. Now what are the advantages? In corporate banking, the main problem is NPA. If there is one NPA, then the whole bank goes down. Whereas in retail banking, there are less chances of NPA. Why? Because the amount is divided. See this example: 1 lakh rupees in corporate banking, I gave it to one customer only. Whereas in retail banking, I'll give it to 10,000 into 10. So there are less chances of NPA over here. Okay. So in corporate banking, what happens? The large value transactions, large number of transactions, interbank transactions, all these are the part of corporate banking. Large value. One transaction of Reliance will be around 1 crore, 10 crore, 100 crore. One transaction of Reliance. Whereas in retail banking, it is smaller amounts. Okay. Interbank markets. Interbank markets mean between bank to bank. That is also the part of corporate banking. SBI will transfer money to PNB. PNB will transfer it to Bank of Baroda. Anything, all these sort. Okay. Retail bank is a visible face of the general banking. Okay. So whenever I say I want to go to PNB, what do you mean by this? I'll go to the branch of PNB. Whenever I say I have to go to Bank of BOB, Bank of Baroda, it means I'm going to this. If I'm going to Union Bank, I'm going to a branch. Corporate banking is not that. Okay. So mainly what happens, retail banks are in the main cities, main locations, and corporate bankings can be anywhere because there the clients don't go to the branch. Okay. So corporate banking, on the other hand, works directly with the business to provide them loans, savings, credit cards, credits, credits basically, checking account. Checking means current accounts. Sir, kindly remember this word checking account. This question is asked nowadays in banking in your JAIIB. Checking account is a current account. In checking account, kindly remember no balance is to be maintained in this current account. Only the part is there should not be any cash transaction. In checking account, there should not be any cash transaction. Okay. If you have a cash transaction, then you have to maintain the minimum balance. Difference in customer base. Obviously, in the customer base in retail banking is smaller, whereas in the corporate banking it is bigger. Transactions, large volume. Volumes are high, amount are less in retail banking. Whereas in corporate banking, volumes are low, but amounts are less, are high, huge amounts. Processing cost. Corporate banking is a low cost operations. Corporate banking will always have lower cost. Retail banking will always have a higher cost. Always. Why? Because number of customers are higher, isn't it? Risk involved. In retail banking it is less, whereas in corporate banking it is high. Okay. So retail banking will always have a less risk and NPA also. Whereas corporate banking will always have a high risk and high NPA. What are the various models? Here, just now I told you there are two things. One is this model, and second is the this that approach, right? So approach we saw SBU, the departmental, and this last one is was this integrated. Now see the model also. This model topic you'll be having it again in one of the next chapters. Whenever you study the technology part, there also you'll be having the model. So models are basically four types: horizontally organized, vertically organized, predominantly horizontally organized, and predominantly vertically organized. See this: horizontally organized, vertically organized, predominantly horizontally, and predominantly vertically. What do you mean by this? Kindly note, main are these two, 1 and 2. These two are the main ones. What do you mean by this horizontally organized? And remember, this is a sure question in the exam. Sure, be sure about it. You will definitely get the question on this. So, what is horizontally organized? It means that the data is not shared between the various departments. For example, home loan. Home loan will have their own customers. They won't share this data with personal loans, with car loans, credit cards. They won't share it with savings accounts. So no data sharing is there among the various departments. Whereas in vertically organized, it's a common database. Nowadays you have this core banking software. In CBS, what happens? You can get the whole data of any customer anywhere. So that is vertically organized. Here the common data is there. It is shared with all the departments. Okay. PH, predominantly horizontally organized, means what? Roughly some data is shared. So some part is outsourced. Outsourcing is the main part in vertically organized. Some data is outsourced. Some part is outsourced. Predominantly vertically, majority of the part is this commonly shared. Okay. So remember, in horizontally organized, it is the data is shared product wise, but outside the product, no data is shared. Home loans will not share the data with the personal loans. Personal loans will not share the data with credit cards and others. Okay. Chalo, we'll continue tomorrow again on this same topic. Okay. Chalo, bye for today. Have you got this, everyone? Okay. We'll be going for the same topic tomorrow. Okay. Bye. Good night.